Okay, so I was saying that I would have been taking my TPs at this swing lows. So this would have been my first take profit, second take profit, third take profit, fourth take profit, and then the final targets here. Why? My final target is going to be there based on this 30 minutes entry that I took here, or that we took here. Okay, so based on that, all right. Since my directional bias hasn't changed, okay. So you can see here too, I would have made the 1 to 3 and I'd have left it some to keep dropping. Okay. So now let's go back to the 30 minutes time frame. Excuse me. So on the 30 minutes time frame, this is another sweep and a break of structure, and this is my structural liquidity, right? So you can see, even though we've taken a trade here, we can still keep taking trades. Why? Because we know our bias. We are looking for, it doesn't mean you can't take buys. You can take buys, but we are looking for sells, right? Because we know that this pair is bearish. Do you understand what I'm saying?
Yeah.
Okay.
So it is safer to take sales, right?
It is safer to take sales. All right. So this is where I would have entered. And my TP for this entire range should have been here. I'll take my sell here. I would have been tagged in here. Sell slightly above, like so, slightly above. Okay. My 1 to 3 would have been right here. I'd have taken out majority there, left the remaining 10% to this point. Right? I'm not sure if would have been taken out here. That remaining 10% would have been taken out by a little bit right here. Okay, but we've gotten our 1 to 3. So I'll still count this. You see that 1 to 3, just take it, half piece, leave the rest. Do you get at break even? You get, but my 1 to 3, I would have gotten it here. I'd have put the trade on break even and I'd have been taken out here when price came back. Do you understand? I'd have been taken
Entry
out
point,
here.
right?
Yes, at the entry point. But my 1 to 3, I would have gotten it. This is my 1 to 3. And I'd have set this trade to break even. And I'd have been taken out here. No problem.
Okay.
Do you understand what I'm saying?
Yeah, I do.
As an opportunity on V25 sells, but it's already moving. I just saw it now. I had marked it out. This is it. Let me just show you. Okay.
Don't know. Do you also set alerts?
You can't set. I don't set alerts. Can't set alert on. Which screen are you saying? I'm now confused. What are you saying? Is it V25 you're saying?
Yeah, V25.
Okay. Yeah, this is it. I marked it out. You get same thing, sweep, break, and then liquidity above this guy. So I'm expecting a buy from here. But at this level, sweep, break. So I knew price was going to come back here. You can see I marked out this imbalance right here. Right? So I'm expecting price to react and bring me here. This was the trade I took yesterday. This one, this sell. All the way to where? To the target, this point that formed it. It wasn't taken out here, right? To this point. Okay, that's my target within this trading range. All right, sweep, break, structural liquidity. Price comes back there, gives a confirmation on M5 and drops. Okay, so the same, I expect the same thing to happen here again. There's a sweep, there's a break, there's a sweep, there's a break. I know that here, what do I have here? I have a strong low here because this was the model that started first. I have a strong low here, right? So where am I targeting? I'm targeting this guy here. So this buy is the main move to take out this guy, right? But for this to happen, there must be sell that will happen, which is why this bearish QM, the sell QM also formed there. Sweep, break. There's no SLQ. There's an imbalance there. I can use it. So I'm expecting price to drop now. I had marked this before our class. I'm expecting price to drop from here all the way to this point for this buy to now take effect and break this high. Right? So here at this point, I have a what? I have a strong low and I have a weak high. That's what I have. Okay, I have a strong low and I have a weak high. And typically a stronger level is going to take out the weaker level. In this case, the sell model formed before the buy model. So I have a strong high and a weak low, right? So I expect this level to come and take out this level here. And that's exactly what happened, right? But again,
whichever forms first.
Yes.
Whichever forms first, it means
It's a strong level.
Okay.
But
Okay.
again, I'm also looking at what? I have my eyes on the higher time frame as well, right? So at some point in the future, I'm expecting price to come into these levels, and I already marked everything down. Do you get? So at the end of the day, what you're now able to do, which was why I stopped, I kind of like wasn't sharing my signals again, right? But I'm trading, is you'll be able to get scalp entries up onto where the main move will now starts. Do you understand?
Yeah.
Yeah. So those scalp entries, I am getting them, right? But the main move will start at some point. Those are the main moves I now typically share. You get like the way I shared this V151S was from, you know, I kept saying it. If you remember, if you follow through, you remember I said I'm expecting price at that level, blah, blah, blah. So you can see price took out this SLQ, and I said why I took the trade. So why? Because there was a break of structure to the downside. Okay, so I took it from here, but we saw what price was doing. Price kept on playing. Let's check the 1 hour time frame. Right, price was playing there for like 2 days. I was holding the trade, right? But I didn't risk so much on the trade. I only risked $50 on the trade. Okay, so this was why I took the trade, and price kept on playing. And immediately price tapped into this level. What happened? It dropped and hit our TP1 target. Okay.
Yeah.
And it even gave a confirmation. So if I was around, I'm sure I would have still taken that trade from the point the confirmation was given on M5. Look at it. See that? See this engulfing candle. Then price did what? Price came back into the single candle order block, this level. See that? And boom, all the way.
So what is that?
Single
single
candle
candle
order.
Okay.
Yeah, single candle order block. This last green candle that led to this drop.
Okay.
So price came back there and then started dropping. You've heard me mention single candle order block before, haven't you?
I can't recall.
So, I've mentioned it. I've mentioned it several times. I haven't mentioned it on Chux's channel, on Chux's meeting one time. That's how people knew about me. Right? Yeah. So price came back there. But even if you are taking the trade immediately after this engulfing candle was formed, you will still be fine. And your TP1 is all the way down. Now you see that was money, right? And you can see here down the 5 minutes, I already marked out some levels again. This was a trading range. This was a trading range. You get on 5 minutes time frame, right? And I'll keep following it like that until I get a re-entry. Once I get a re-entry, where am I going to? I'm going to the final target, which is on H4, which is where? This is our trading range on H4, sweep, break, SLQ, waited for price to come there, tapping, right? Our overall target is where? Down here. This is where price is coming to. You get same thing every single time. Don't stress. But in between, you can always catch what? Scalp trades, okay? In between, right? No stress. And price might not even retrace from here. Why? Look at this. This is a sweep, right? This is another block, very shorter block. There is no SLQ here yet, no structural liquidity here yet, but it could always form, right? But even if it doesn't form, if price doesn't give me a confirmation here, I won't take it. If it doesn't give a confirmation here, I won't take it. The truth is, this is very unlikely to give a confirmation, right? This might still give a confirmation, but not this, looking at the higher time frame, okay? So if I don't still get any confirmation from any of these levels, price will typically come here and give me a confirmation. What do I expect price to do? Price can do this. Simple. Okay, from this level, but I will not take a direct entry. I would allow price, just like what we are doing with V100 right now. I will allow price to do what? Give me a sell model within this first before I now start taking my shots all the way down. Do you get? So this is how it works. And trading is a patience game. But trust me, over 90% of people that trade have zero patience. Zero patience. Do you get? But trading is a patience game. Okay, let me share the V100 back. This guy. Is it V100 you're saying now?
Yeah.
All right. So again, we come again and look for the same thing over and over again, over and over and over again. This is 30 minutes time frame. You can say this is a sweep right here. No matter how small, a sweep is a sweep. This is a sweep here. This is liquidity here. And this is my QMR here, last green candle before the drop. Okay, remember, I can always use QMR or other blocks, whichever. Okay, and this is my protected high right there.
Yeah.
Okay, now here again, this is a sweep as well. This is my protected high, which is why we always want to get confirmation. This is like my structural liquidity. This took it out. So this is my structural liquidity now. This is like my point of interest, right? But let's drop down to the 15 minutes time frame. Let's get something clearer. Since we can. Multi-time frame analysis is very good. Okay. All right, this level. So now at this level, I would probably not use this as my QMR, as my structural liquidity. I would probably use this because I know that if I drop on the 5 minutes time frame, this, let me see. Let me see, can I get 5 minutes from this date? I doubt, but let's see. No, can I get 10 minutes? Yes. 5 minutes so that I'm not cold though. So on the 5 minutes time frame, or lower time frame, I'm sure this is going to be a swing. Okay.
But that break of structure, will it be valid assuming I check this as structural liquidity?
Yes, this is a break of structure right here. This is my sweep. This is a break of structure. Those two, you must have it. And then this is now my supply zone. Unmitigated supply. See that? So let's go back to the 15 minutes time frame. Excuse me. Okay. So on the 15 minutes time frame. Mind you, on the 5 minutes time frame, you'd have gotten a confirmation here because you saw how the 10 minutes was, right?
Yeah, yeah.
Okay, so you'd have gotten an M5 confirmation here. Okay, and then your target in this range will be where? Here. That's the target. Sweep, break, this is your target. All right. And then you simply do what? Take here. Stop loss slightly above, like so. And your TP is right there, 107.9. You could take partials here at this swing low, TP1, and take the rest down here. This TP1 will be more than 1 to 3. See, 1 to 4. Okay, but you could take partials right there, 1 to 4. All right, and then keep the rest to this level. Okay, so now let's go back to the 30 minutes time frame. We came there because we wanted to see things clearer on that level. So on the 30 minutes time frame, remember this level, we marked it out, but price hasn't come there yet. Price could actually come here and give a reaction. So we want to hold on to it, right? Because again, this it meets our criteria, sweep, break, structural liquidity, right? So we want to hold on to it. Price will come here, give a reaction. It might not give a reaction to break all the way down here, but at least you catch your 1 to 3 here, all right? The overall place where we're expecting price to come into is this higher time frame point of interest that we marked out here that has a bunch of liquidity resting above it from this level. All of this, people's orders, all of this. Okay, so I know that without a doubt, price is going to come back here. Liquidity is magnets, right? So price will come here, take out all of those orders up here, and then that is where a true move will come to take out this guy. Okay, in fact, this video, I think I'm going to, can you give me the permission to share it with the guys in the channel as well? Or no, I shouldn't. Because
It's fine. It's fine.
okay, analyzing this guy, I'm saying that definitely there are a bunch of opportunities here and people should look out for this guy. Okay, this is how you do top-down analysis. So let's keep going. Remember, we're only looking for sales. So I'm saying again here, this is a sweep and this is a break on the 30 minutes time frame. Okay, remember, win or lose, same thing. We really don't care. This is a break of structure. We are doing risk management, right? And each time we win more. That's the idea. Okay. That's your protected high. Okay, although this structural liquidity is kind of close, but yeah, I'll still take it. Right there. Let's drop down to the 15 minutes time frame. Let's see if we can see the POI a lot clearer. Although we can see that this would have been a loss, but I won't say what 15 minutes time frame looks like. Okay, so truth is I might not have taken this trade. Like no POI is giving. Do you understand? How come this was the way I marked? This is the high now. Why did I mark that this? Okay, so on the 15 minutes time frame, my last green candle is this one, right? It's not giving. Although I don't have to use that because typically this was where the large orders came from, right? That left like a small imbalance here, like sell. This was where the sell pressure came from. Okay, so the truth is I can actually use this candle here as my supply, even though it's not the last green candle. I can actually use it, right, as my supply. Yeah, it doesn't have to be green. It's just your order block is a point that huge volume came, all right, and then left an imbalance or a fair value gap because of the huge volume that came in. So that's typically your order block, okay? And if I'm actually to follow, I will not mark this week, right? But I'm including the week because of this constant red candles that came. Normally, this is what I would just do, right? But I'm not going to do this. Let's just leave it like this, okay? So at least you see that from the structural liquidity on the 15 minutes time frame, there was a reaction to the downside, right? And if we could drop to the 5 minutes, you see that there would have been a confirmation around here, okay? And typically, this swing low would have been around my TP1, this swing lows, okay? Using the 5 minutes time frame, right? And at this point, so the supply level we marked, price actually came in, tapped in, and gave a reaction. But this one, this entire trade wouldn't have been up to 1 to 3. So I'm going to mark it as a loss. Okay, I'm going to mark it as a loss. So that's our third loss. Let's go back to the 30 minutes time frame. Remember the losses that I marked out before? I think there were 2 of them. These levels, right? This and this. We marked them both. Okay. And this is the third one. This is and down. So again, on the 30 minutes time frame, we want to see the same thing happen. Right? This one, I wouldn't take it, right? Even though there's a sweep there, you can see the sweep and but there's no, it's not giving. The break of structure is here, and see how far the structural liquidity is far from the protected high. even though it will still have worked, but this is not something I would take. Okay, so I'm not going to mark it. All right. Here, this is a sweep, but is there a break of structure? This is not okay. This is a true break of structure. I'll mark it out. This is my sweep. This is my break. Although this is not giving, but I'll mark it out. This is my structural liquidity here. Let's drop to the 15 minutes time. Let's see. Remember, I want to see the sweep and the break every single time, right? And then you now want to look for the liquidity around it. Okay, so on the 15 minutes time frame, this is my sweep, this is my break, this is my structural liquidity right here. Right there. Okay, this is my protected high. Right there. So clearly this would have been another loss. Right, but let's check the 30 minutes time frame again. I want to see if there's something else we could have taken. Technically, this is a sweep, but I don't really like the break of structure here. This is a sweep, this is a break, and then price will come back, use this unmitigated, we can drop. Right, so this is actually another trade here. That's a sweep. Your POI here is the unmitigated weak. And there's no SLK. There's no liquidity. I wouldn't take this. Okay, so this is something I would probably take, right? Especially if I drop to the 5 minutes time frame. But I'm sure we can't get 5 minutes here, right? So I'll just mark this as a loss as well. Right there. Okay. So let's go on. Remember, same thing. We are looking for sweep and we are looking for sales. Okay. I don't see any sweep here, but supply is in control. This is like a sweep. And this one is not really giving. You get just like this one, right? But I just said, okay, let me take it. Okay, same thing. Okay, this was okay, but this wasn't given. There's a way that you just seemingly know. This as well wasn't given. There's a break here. Sorry, there's a sweep here. This one. There's a sweep here. But you know that within that range, where's your break of structure? If I want to mark this as a break of structure, it's not a body close until far, far away here, right? There's a way you just know when something isn't given, okay? And you just stay out of it, all right? So let's remember, we are looking for only sales, right? Is this something I would take? Probably not. I would probably not take this. But let's see. Let me just mark this level. Then we go down to the 15 minutes time frame. It's kind of like intuition sometimes. Yeah, personally, I wouldn't take this. Like, I won't take it. I won't even look at it. So let's skip it. Yeah, I'm saying price. We are saying price. We are saying what price has done already, and it seems maybe it would have tagged in and all. But the purpose of backtesting is to be real to yourself. Is it a trade you would have taken? This is the trade I wouldn't have taken. Like, makes no sense for me. Okay. Remember, we are looking for sales. It's just like saying you want to take a trade here. This is nonsense. Right? You can take it and it will work, but it's nonsense. All right. So we've gone through the entire thing right now. So at this point, what I'm waiting for. Excuse me. What I'm waiting for is this guy to give some form of reaction, this guy, and this main guy here that has a lot of stop orders above it. Okay. So now looking at the whole thing, from the point where we had marked out our POI on the higher time frame, we would have gotten 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trades. Out of the 13 trades, we'd have had 1, 2, 3, 4 losses and 9 wins, right? So your 4 losses is fixed loss. If you are risking $50, $100, $10, $5, whatever. So let's assume you are risking $20 on this trade, right? So you'd have lost $80 on the 4 trades, right? And assuming you are risking the same $20, right? And you are going for the same 1 to 3 RR fixed, you'd have won 9 times 20. You'd have won how much? $180, right? No, that's wrong. That's the wrong calculation. You'd have lost $80, and then $20, you'd have gotten $60 for each trade.
For each trade, yeah.
So 60 times 9.
That will be
60 times 9. That's $540. So you'd have won $540 and you'd have lost $80. So you'd have made $460. Right? All sticking to what? The bias from the higher time frame. Right? And you are going for your 1 to 3 each time. And remember, there were some trades that the remaining 10% you would have left hit the targets.
Yeah.
Right? We didn't add those ones to it. Do you get? We didn't add those ones to it. Right? We just calculated based on 1 to 3. Okay? And this one here, 1 to 3.6, 1 to 5. This one we would have gotten our 1 to 3, but I just did it all the way to extend so that you see that, okay, yes, it took out that low. This should have been our 1 to 3, 1 to 3. You'd have gotten your 1 to 3. You'd have gotten your 1 to 3. But remember, the remaining 10% you left behind would have done something, right? Your 1 to 3.
Yeah.
Your 1 to 3. You'd have had a loss. And you are now waiting for this guy and this main guy to take out what? This guy. So this is the guy that will take out this guy. But this one, price can come there, give a small reaction, and then continue to the upside. Do you get what I'm saying?
Yeah.
Yeah. So this is how you do top-down analysis. Once you find what the higher time frame objective is, like we did here, then you now stay in line with the higher time frame objective, right? So the higher time frame objective here was what? Sales. Okay. To which point? To this point. Okay. So we're going to be looking for sales that meet our criteria, which is sweep, break of structure, structural liquidity, below our POIs, because we are going to be taking only sales. Could you have been taking buys in between? Yes, you could have, but those are lower probability trades. Okay, the main trade is the what? The sales. All right, so I hope this helped. Let me stop recording. Let me stop recording.